One Up on Wall Street, How to Use What You Already Know to Make Money in the Market by Peter Lynch is one of the must-read book for every investor. So every downfall, I try to read or reread this book and it gives me a lot of insights. I will share some glimpse today as well as give you 20 sectors and 2 to 3 stocks in each of those sectors to get you started with stock picking. Peter Lynch has shared a very detailed and very simple approach to stock market investing. I use the same, and most of my investment in the stock market are based on the theories and practices by Peter Lynch. Of course, some of them are from the Warren Buffett way as well, but it's a mix of both. So Peter Lynch needs no introduction, and he is one of the top fund manager from the US, and he has shared many talks on how an average investor can pick stocks, how an average investor has an edge over fund managers, and I also I conquer the same view, and so let's discuss how the book is organized first in a brief way. The book is organized into three sections. First of section 1 is from chapter 1 to 5, which says how you can pick stock from the main street rather than from the Dalal street. By main street, he means if you are a customer of the product of a company, you know how well the product is, how well it resonates with you, and you can be an investor in the same product. So if you are a customer, you know whether the product is working or the competition is eating up the product, and then use that information, the main street information, to invest in the Dalal street. The section 2 of the book is from chapter 6 to chapter 15, where the author is classifying the stocks into 6 categories: slow growers, stalwarts, fast growers, cyclicals, asset plays, and turnarounds. So there is a different approach to investing in each of those stock categories, and author has detailed everything about how each of those I mean a stock in each of those category needs to be addressed. So this will help you understand. And let's say if you have a portfolio in a correction, if a stock is going down, you can classify or reclassify them into the categories. And if you are an investor who prefer to invest in say fast growers, then should you be adding it or you shouldn't be adding it. So that's the exercise that I tend to follow when I am rereading the book. And then section 3, which is chapter 16 to chapter 20, is helping you to craft your portfolio, like diversification or focused approach and things like those. So that will also help you to at times reduce the number of stocks in your portfolio. I'm generally trying to do that. So from 21 stocks, I have nailed down to around 16 or 17 of them. So that's a good approach of focused investing. Let me share few words of wisdom that resonates with me or my style of investing. The best line that I found in the book is the typical big winner in the Lynch portfolio generally takes 3 to 10 years or more to play out. We as a retail investors are considering ourselves as long-term investor when we invest for a year. But once you look at great investors, you will find that they give a stock a time of 3 years or more for it to flourish or turn around or say do sustainable growth and things like those. The second quote that resonates with me is finding the next page industries or next Asian paints. And Peter Lynch says the next of something is never on. So if you're trying to find a new page industries in the sector itself, the page industries itself is the next page industries, or Asian paints is the next Asian paints. So you have to look for the next in a different sector, and it is never on. You have to invest in good companies who generate good cash flows, profit growth, sales growth, and slowly but surely you will find that you have landed on the next one. A great line for the number of stocks you should have in your portfolio. Peter Lynch says, own as many stocks as there are situations in which you have an edge or has uncovered an exciting prospect that passes all the research. So you have an edge by looking at the main street rather than in the Dalal street. So then once you have an edge in a stock, you can invest in it. There can be say more stocks if you have an edge in many stocks, or you can reduce the number of stocks if you don't have an edge. Thoughts of wisdom: selling your high returns. So we always have a tendency to book profits, but one line that hit me very hard is selling an outstanding fast grower because its stock seems slightly overpriced is a losing technique. And then he goes on to add, you won't improve results by pulling out the flowers and watering the weeds. This explains classically, let's say if you want to build a garden, you have to grow flowers and remove the weeds. You have to bet on the winners and remove the losers. Similarly, there are top performance and their prices may be slightly overpriced, and that should not be the reason to sell. Yeah, you may not add them, but you add them in correction. That's perfectly fine. I have also shared when to sell a stock, and you should also check that video out. I will share the link of that video in the description as well. Based on Peter Lynch's approach to the market, I have made a list of 20 sectors where I am a customer. Some of my friends or family members, anyone is a customer of that product. I know a little bit more about that company, and so I am sharing it over here. If you are a customer and if you understand the sector, then you can consult a financial advisor and invest in the companies that you are using it. The companies that I'm mentioning is only to understand the sector. None of them is an investment recommendation. The first, of course, is daily essentials. So toothpaste, shampoo, powder, all those things that you are using or your family members are using, you can invest in them. Companies like HUL, Colgate, Dabur are producing those products, and you can consider daily essential as a sector to invest in. Number two, if you have kids, you know they like to eat Maggie, or if you have say newborns, Cerelac is one of the product that you prefer for them. So Nestle is a company that produces those products. Number three, fashion brands. So we Indians are moving from say non-branded clothes to branded clothes, and there are many companies who are doing great in this sector, and ABFRL and Page Industries are few to name. Go Colors is one of the recent listing that also is in the fashion brand. Number four, shoes. You prefer to wear any company shoes, and you can consider investing in them. I'll to name a few companies. So Bata, Relaxo, Campus Activewear, Metro Brands are few companies who are in this sectors. Number five, cars. So we only have one listed player, and it's a Maruti Suzuki, but you can also get into the auto ancillary names and invest in companies which provides certain parts to the all the brands of the company. So you can invest in battery manufacturer or glass manufacturer, or say windshield or mirrors or say speedometers. There are listed companies in each of these sectors, and you can consider investing in them. Number six, bikes and scooters. So if you are using say Honda, it's not listed in India, but other major players are listed in India. Bajaj Auto, Hero Honda, TVS are some of the bikes and scooter manufacturers which are listed in India. Number seven, telecom as a sector. So we all use mobile phones, and we may, if we like the services of Bharti Airtel or Reliance Jio, then you can consider them for investment. Number eight, food. Do you prefer ordering food from quick service restaurants? It's a great sector to consider for investment. Number nine, do you smoke? If yes, you can consider investing in say companies like ITC. I don't smoke, so I don't invest in ITC. Number 10, offline shopping. So my wife and my daughter is a fan of going to DMart every month, and so that is how I got that stock into my portfolio. It's not a recommendation, but if you are a user of an offline shopping app, there are many listed players. you can consider investing in. Number 11, and I'm sure every one of us has touched this sector, it's called oil and gas sector. And I'm sure you have gone to a petrol pump and filled an oil. Even if you don't own a vehicle, you travel by bus or any public transport, they also use oil and gas. So you can consider investing in it. However, I don't invest in them because there is no edge of one oil producer to other, and it falls into a PSU sector. So I generally tend to avoid PSU as a sector. Number 12, banking. So banking as a sector, every listed players is listed in the Indian stock market. So you can consider investing in your bank if you like the service of that bank. Just being a customer is not good enough. If you like the service and you don't want to switch to other bank, or your banker is helping you out with the problems that you have, then you can consider investing in it. I don't prefer investing in banking as a sector because I don't see one bank having an edge over other, and the products of each of those banks are more or less similar. Sector number 13, paints. So festival season is coming. So if you prefer to use a paint of a particular company, you can also consider investing in that. Sector number 14, heavy electrical appliances. So check out the ACs and TVs that you are using in your house and invest in the companies that you are using, and if it is in your house for a long time. So for me, Voltas, Whirlpool are great examples. I mean, I use a Sony TV that's not listed, so I don't invest in TV companies, but Voltas and Whirlpool can be considered for investing. Sector number 15, kitchen utensils slash appliances. I didn't find the kitchen appliances company listed, but utensils companies are listed. So TTK Prestige and Stovecraft are an example of the kitchen brands that are being used in my house. Sector number 16, medicines. So if you buy medicines for your elder parents, just check out the brand name that is or the company name that is there on that medicines. So I generally found that in many medicines, the doctor recommended the Abbott medicine and there was no alternatives to it. My wife had a DVT problem, and the medicine that was recommended by was the medicine that was written by a doctor was by Abbott, and there were no alternatives to that medicine. So that's how I would like you to search for medicine. So if you are going through any medicine, go to Tata 1mg and look for alternatives. And if you find too many alternatives, that's not a good way to invest. But if you don't find too many alternatives to the medicine that has been written for your subscription, for your I mean parents or any family members, that's a great company to invest in. I did find Abbott and Cipla for the medicines which are very unique to these companies, and then there are not too many, I mean, direct alternatives. There were some substitute alternatives were there, but not direct alternatives. Sector number 17, hospitals. So if you happen to be a patient in any of the hospitals, or if you're any relatives or anyone is a patient of say any hospitals, you can consider investing in them. When my dad had an heart attack, he was admitted to Shelby. I would not say I liked their approach, but it is something that helped me analyze those hospital chains like Shelby, Apollo, Fortis. Though I didn't invest in them because I didn't like their approach. I was not very satisfied customer of them because they were more inclined towards taking more money from me. But still, I mean, you can consider those as a sector. Sector number 18, jewellery and eyewear. So, jewellery as a sector is very inherent to Indian. Everyone has, uh, I mean, some amount of gold jewellery in their home. So, if you happen to buy it from a particular shop, see if that is listed. So Titan, TBZ and Kalyan are three listed players or three top listed players. There are other listed players as well. So see if you are buying a jewelry from one particular shop and if you can invest in that company also. Sector number 19, technology or IT companies. I am from an IT background, so I have worked in many of the IT companies, and that gives me an advantage to be able to know an IT company much better than others. So that way, if I like any IT company, I can be an investor in it. Sector number 20, power sector. So I live in Surat and there are two players who provide power here, DGVCL or Dakshin Gujarat Wijh Company Limited and Torrent Power. So DGVCL has lot of fluctuations and it is available in only one area of Surat, and Torrent Power is available in other area of Surat. So if I have to look for an office where I am using my Mac machines, I prefer to rent office in an area where there is a Torrent Power. So that is one of the ways to consider a power company. In my case, it's a special situation where I have two companies and I can compare them. But if you are only, say, I used to be in Calcutta as well, and CESC has provided much better electricity to Calcutta. So if you happen to be using such services, uh, then you can consider investing in them. The other example can be, we have a piped gas line over here, and so we use Gujarat gas. That's a special case to Surat. But if you happen to be using such services, if you like the services, then you can consider investing in those companies. Two sectors that I always prefer to avoid, and that is, one of them is aviation sector, because in the past history of say 50 years or 100 years across the world, no aviation company has ever made money. So that's one of the reason I avoid. And the second one is real estate as a sector. I generally tend to avoid real estate as a sector for two reasons. I am not a customer of that company, but even if I find somebody who is a customer, then still I think the prices of real estate are rising in such a manner that any player can be stuck because of loans. They take up high amount of loans, and rising interest rates is not good for them. They have not been able to generate good returns on the invested capital. So real estate as a sector is an avoid for me. So two blacklisted sectors and 20 whitelisted sectors. Which sector do you prefer investing in? Are you invested in any of these companies? Share them in comments below.